Good morning, traders. It's Monday, August the 14th. Taking a look at the charts, we'll start off with the SPY or the SP 500 index here. You can see here we've got our simple time cycle analysis on here where the market has gone from VIX spikes and oversold conditions with capitulation kind of washout lows. You can see how these have kind of repeated themselves, and more or less on Thursday, Friday last week, we saw the market sell off, and more or less we're looking like we're timing this low pretty darn close to the potential bottom here. Obviously, sometimes the low can drag out over a couple weeks, similar to over here where it ended up being a little bit of a double bottom, kind of came down and then found another bottom, but more or less in the middle there. So it's not exact science when you come to time cycles like these, but you can see where we are in the grand scheme of things and potential for the market to try and rebound and move higher going forward. Now, also, if we take a look just at our other type of cycles here, we've got our short term and our momentum cycle also in the lower reversal zone. And when the trend is to the upside, we're looking for these type of dips in the market. Again, we had both of them dip down here. We had both of them dip again over here. And Thursday, Friday last week, they both dipped down into this oversold territory. So overall, this morning we're already seeing equities moving up over 0.5% and starting to rebound, and we could very easily see this go back into the upper zone and continue to see higher prices in the equities market going forward from here. Now, if we take a look at a couple of the safe havens, obviously if money's flowing into stocks, it's going to be coming out of somewhere else. And bonds, they kind of moved up to our measured move here, and you can see here they're starting to reverse down this morning. We do have a potential downside target all the way down here for bonds, which happens to also be this previous low. And this target here is using Fibonacci extensions. Simply you take the high down to the low, the reaction high, and then the Fibonacci extension tool automatically gives you the 618 target, which would be the first level the price should hit. If it hits this and has some type of small bounce, then typically you get the 100% measured move following after that. And that would be a pretty decent correction. That would be an A, B, C correction down to a previous significant low. All that within a significant bottoming formation where bonds have sold off. They're trying to build this base from right across this area. And eventually, I think we could see a big move from bonds up in due time once the stock market rolls over and a new bear market starts to emerge, which I posted an article and I'll link it in the email here for you to see about the potential of a big market reversal, kind of like the dot-com bubble again unfolding here. Now, taking a look over at other safe havens, gold and silver both down this morning. Zoom in here, gold coming up to a potential triple top, came up, pushed up to these highs. Today we're seeing it sell down. Obviously, it's kind of reached for the sky, a little long in the teeth, and we could very easily see this pull back. And we've been waiting for the equities market to find that bottom, because until we see that fear in the VIX spike, that when the VIX spikes, we see money move into the safe havens, and that's what happened. The VIX spiked, safe havens spiked, and now I think we're getting to a point here where we could very easily see the safe havens finally roll over and move down and have a fairly decent pullback. Silver, same thing, just kind of reach for the sky, series of lower highs, lower lows, could very easily pull back from here. And if we go to miners, miners have continued to kind of trade in this. They've had a pop and consolidate. They've been holding up fairly well. They're not really making lower lows. They've got a pretty strong base here. It's been holding up fairly nice, but overall, they are set to gap lower today, somewhere down into this range, back down to the 20-day moving average or so. But we'll see. Overall, if it breaks this low here around this 21 level, then we're probably going to go and flush down and tag these December lows back down in the 19 zone before this market resets and gets ready for the next major leg higher. Now, if we take a quick look at the VIX, here is the chart of the VIX. Let me zoom in a bit. Last week, Thursday, Friday, we saw the market really spike up with the VIX. Today, the VIX is gap lower. It's free falling back down, and it's down about 15.5% this morning. And usually VIX is short-lived. You get this big spike in fear, and then boom, it dissipates and kind of fades back down. And that's what we're looking for. Is we might see it chop around up in this range a couple more days still potentially, but overall fear should dissipate and move back down if these cycle lows are all in sync and stocks continue to grind their way higher. This should come back down in this 10 zone. Last but not least, let's just take a quick look over here at the US dollar. US dollar came down to our measured move, and this blue line here is a long-term pivot low from back in May of last year. Hit both the measured move and spiked down to hit that May low, and we got a nice bounce. It only bounced up to the 20-day moving average. It's rolled back over. And the question is it going to find a double or triple bottom down here, find support and rip to the upside? And if it does, commodities are going to have a very sharp pullback. The U.S. dollar this morning is up pretty nice. We're going to see a gap higher with the ETF, and we'll see if we can get some traction and really start the second leg up to get it to the 618 level here as a resistance. So we'll see where that goes. Obviously, a strong dollar will put downward pressure on commodities. And if we take a look at crude oil here has been making this reaction high. It's got a series like gold and silver, more or less, lower highs, lower lows, and more or less had a big down bar, a bunch of inside days, and then a big red bar back down. And now we've got this tiny little bear flag forming, holding at this 20-day moving average, and also these recent lows right across here. All these lows here, it's just hanging on and above the 20-day. If it breaks this, we talked about this level. If this level was broken, these lows, I think we talked about it somewhere over here. But so last week we talked about it. If it closes below the 20-day or below this blue line, then it could be lights out, and we could see a nice move to the downside back into the mid 40 range into this area somewhere down in here very quickly. And then from there it could consolidate. But overall, there's a pretty big trend to the downside with crude oil. And you look at the size of those moves to the downside where prices waterfall sell off after these rallies, we could very easily see another waterfall sell off into the low 40s, potentially back down even um, to break to new multi-year lows down here. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye bye.